This is James Corbett of Global Research TV at grtv.ca, coming to you with another GRTV feature interview. And it's being recorded today on September 30th, 2011 here in Japan, but I'm joined on the line by Ellen Brown, an attorney and also an author of many books, including the highly popular and very influential book Web of Debt, which can be found at webofdebt.com, along with many of Ellen Brown's articles. She's a frequent contributor to globalresearch.ca. Ellen Brown, it's a pleasure to have you on. Thank you for joining us.
Well, thanks, James.
Yeah, absolutely. Well, I should also mention that you're the president of the Public Banking Institute at publicbankinginstitute.org, and we'll get more into that later in the interview. But I'd like to start today, actually, by talking about an article that appeared recently on globalresearch.ca entitled Financial Warfare, Sheared by the Shorts, How Short Sellers Fleece Investors. And I think this is an important aspect of understanding the stock market collapse and how asset and commodity prices can be pushed down, including gold and silver and things of that sort. So perhaps just to get a base level understanding for the listeners and viewers out there, perhaps we can start by talking a little bit about the mechanics of shorting and naked shorting and how they work and how they've functioned to help propagate the crisis that we find ourselves in.
Okay, well, you can guess what prompted me to write that article. I got fleeced. Gold and silver right now, particularly, are way down at a time when you would expect them to be way up. And the shares, the gold and silver shares, are way, way down. I mean, much lower than they were when gold and silver were much lower. In other words, there's something very fishy going on here. And so it turns out that a massive amount of short selling has gone on with the shares, which means the stocks, gold and silver stocks. But it wouldn't have to be commodities. It happens to be commodities right now, but at other times in history, it's been different things. For example, Lehman Brothers was heavily. It was the victim of a bear raid, which brought down its stock by 40% in one day, which happened to be September 11th of 2008, and that is actually what propelled it into bankruptcy, not the fact that it was undercapitalized. All those banks were undercapitalized, but this particular one was targeted for takedown, and it was taken down. So it is possible for the short sellers, the bears, or it's not clear who this is. There's a lot of rumor. I mean, it does appear that the government is attempting at the moment to take down gold and silver in order to inflate the money supply with more quantitative easing. In other words, people will be screaming about inflation as long as we have commodities way up. But if commodities are going down, it gives some credibility to their argument that we're in a deflation, not an inflation. And I would agree with that, actually. We are in a deflationary period overall. If you consider real estate, which is a much bigger factor in the whole economy than gold and silver. Real estate is way, way down. The prices are. Labor is the biggest price or the biggest cost of anything, and it's way down. The cost of labor is way down. So, in fact, overall, we are in a depression or deflation, and it would be a good thing if the Fed would add some currency to the system. I mean, I think that's right. But the Plunge Protection Team, which is actually an agency set up by the government to manipulate markets, is out there making things look good so that the Fed can do this without getting in a lot of trouble. You know, the Fed's gotten in trouble for QE1 and QE2. There's just a whole lot of misconception about what's going on here. So anyway, whoever is doing it, there does seem to be an organized targeting of the gold and silver shares and of gold and silver too, but particularly the shares are looking really bad. So the way they do it is, the way short selling works is that the short sellers sell stock that they don't own. And then the deal is they're supposed to cover, like in the next 3 days, they're supposed to buy stock to replace the stock that they just sold. And what they're planning to do is to buy it at a cheaper price, and then they keep the difference between the price at which they bought it and the price at which they sold it and the price at which they later bought it. But the reason this is a scam is that they're actually duplicating the the stock. It's rather like fractional reserve lending, which is a different type of scam where you're duplicating the deposits of the depositors. But in this case, what's happening is the short seller is borrowing stock from shareholders who have no intention of wanting this stock to go down. They want the stock to go up. These are the longs, the people who bought the stock because they believe in the company. They want to see it grow. It's an investment for them. Their stock is being borrowed and sold into the market to bring down the price of the stock that they have invested in. So you might wonder, why would anybody lend their shares for this purpose? Well, most people don't know that they've lent the shares. Most brokerages, whether they're the big brokers, or whether they're discount brokers, they usually set you up in a margin account. Whether you don't ask for this and they don't tell you, but a margin account is where you're allowed to borrow against your stock. And most people don't borrow against their stock. It's a very risky thing to do. They don't even know that they could do this. But the broker does it because the rule is that if it's a margin account, then they are allowed to lend the stock to short sellers. And the interest they get can be quite high, particularly on something like commodity stocks right now, because they're a bit scarce and hard to get a hold of. So it can go up to like 30% on the interest. And this is big bucks that the brokers are making. The shareholder whose stock is being lent isn't getting a penny of that, and the shareholder is getting killed because his stock is going down. Another downside of this whole practice is that the short seller gets to vote the stock. So sometimes these bear raids, these leverage buyouts, that the short sellers come in and borrow the stock specifically so they can vote, because they want to vote for the company to go with the buyout. And since most people don't take the time to vote their shares, I'm guilty of that myself. It is sort of a nuisance. Then the interested people, the short sellers, can actually swing the vote in a way that is unfavorable to the real owners of the stock. So that's your basic bear raid. And the Great Depression was one long bear raid. It was like 4 years of wave after wave after wave of short selling, whenever the market would try to get back up, there would just be another wave of attack to bring it back down. So that's probably where we are again.
That's exactly right. And I think the important thing to understand in that is that what a lot of people who aren't involved in those types of operations don't realize is that a lot of people make money when the economy is plunging or when the markets are going down, because they're positioned to do so. And that was exposed in quite a blatant and quite a remarkable fashion recently on BBC News, with a now viral video of a trader who they were interviewing, who was talking about how he dreams of recessions because he's positioned to make money from them. So he wants the economy to tank for all intents and purposes. And I think it sets up a situation where it's often been called the vultures of finance capitalism, who swoop in and deliberately try to take down stocks or take down commodities. And whereas, of course, the average person is interested in building up the economy and making all of the boats float with rising prices and rising asset values. But unfortunately, there are people who actually profit on destruction. So I guess the question is, are we seeing the creation of this type of system where these finance capital vultures are really licking their chops, waiting for these types of cataclysmic situations so that they can actually profit from them?
We are, and there are ways that they could get control of that, but because they are in control of government as well, that we can't get the regulations changed. Besides the short sellers, they're the high-frequency program traders who are skimming off of all the trades. They make these millions of shares a second, or millions of trades a second, with their computer programs, and this is all done after hours. It's not even when the stock market's open. And that could be stopped with a little Tobin tax, which is a tax on trades. But it would have to be a global tax pretty much for it to work, because if one country had it and another country didn't have it, I guess I disagree with myself on that, because I think England actually has it, or the UK has it, and it hasn't hurt the UK apparently. I mean, they're obviously still big stock market players. Anyway, it's very difficult to get these things passed. There's always some bogus reason why they don't want to do it, but it's killing the market, and it's making the whole thing unfair. It's not just that it's unfair to the shareholders, but it's destroying these companies. Companies are being eaten from within. Companies that, well, even like General Motors, I understand, was brought down pretty much by that sort of thing.
That's right, and I think you touched on a key point there, because when we talk about regulations or taxes or that type of thing to try to restrain this action, of course we are relying on the idea that the people who would be putting in those regulations would be on our side and not the side of the finance vultures. And I think you note at the bottom of your article that is really something of a pipe dream at this point, and I'll just quote from the article: "What can be done to halt this very destructive practice? Ideally, federal regulators would step in with some rules, but as Jim Puplava of FinancialSense.com observes, the regulators seem to be in the pockets of the brokers and are inclined to look the other way. Lawsuits can have an effect, but they take money and time." And then what you end up suggesting is that people need to take collective action to move away from these types of margin accounts and to start a grassroots movement to move the money away from these Wall Street finance capital firms that are profiting from destruction. And to me, that seems like a much more effective solution than asking regulators to come in and regulate the people that are basically buying and paying for their congressional seats and all sorts of that type of shenanigans that we know goes on. So perhaps you can speak to the concept of collective action.
Yeah, that's where we are in history. I mean, look at this move on Wall Street to I've forgotten the word, but anyway, that they're, what's the word on Wall Street that they're doing?
Oh, Occupy Wall Street.
Right, Occupy Wall Street. So that started as the first time they tried it, I think there were 4 people that actually were committed to stay, and then it just grew and grew and grew largely because of the internet, and you have your Arab Spring movements that have sort of prompted people around the world to do collective action, and it's something you can do through the internet. Hopefully, we'll continue to have those lines of communication. But anyway, it is a time when the government is in control of the wrong side, and it's legal means or I shouldn't say legal. We're not doing anything illegal, but political means are just very hard to work these days. So we may just have a lot of protest movements. I'm not really in favor of taking to the streets, because it's you're dealing with. It used to just be mace, and now it's tasers and really dangerous things. Plus, they don't televise it. I mean, you can be out there putting your life on the line and nobody even notices. But there are other ways. Well, for instance, here where if many people understood that their stock was being used against them and told their brokers that they did not want margin accounts, they want a regular account, it would take a lot of people to have an effect. But if everybody understood that and everybody did it, it's rather like the Move Your Money movement, it could have an effect. So that's just what we need to do is relay the information so everybody understands what the deal is here. You don't necessarily have to go out in the street and risk your life. You can just call your broker